Well, hello traders and investors. My name is Roger Scott. Today is Monday. It's December 7th. It is the last month and the end of the first week of 2020. 2020, where did you go? And I don't think I'm going to miss it for the next 20 years or more. But folks, let's talk about what we can expect this week. Let's see what's on the table. Let's see what the global markets are doing. My goal here is to give you a good idea of what you can expect from the market in the days ahead. So, starting with the global markets, if you look at the indices, we were actually positive overnight and we just turned negative, but NASDAQ is leading. And what did I tell you? You're going to see a period for the next several months possibly where you're going to see the stay at home or the get out and go. Stay at home, get out and go. And if the stay at home, you're going to see NASDAQ lead and the rest of the indices weaken. And if it's the positive, the going out, everybody's having fun, we're back, vaccines working, you're going to see the NASDAQ down and you're going to see the S&P, the Dow, and the Russell and the mid-caps up. So it's going to be kind of what's leading. Is it the NASDAQ or is it everything else? If it's everything else, that means fear is leaving us. If it's the NASDAQ right now, markets are heading back to where I said they would, which is the stay at home, overbought, fear, fear, fear. NASDAQ up means more fear that COVID is here. I just created a rhyme and I didn't even try. You can't make this stuff up if you try. All right, so the bottom line is NASDAQ is leading right now. The Dow is down. The S&P is down. We know momentum levels are overbought. If you look at put-to-call ratio, we are tethering near market turning points. This is telling me right now that rubber band is stretched out and we are going to pull back. We may not pull back quite a bit, but we may. Let's look at the global market. Shares fell in Europe after a mixed day of trading. The U.S. is preparing to slap sanctions on dozens more Chinese officials. I don't know if we need that right now. I don't know if we need drama with China right now, especially in light of the numbers that we're seeing right now. I mean, choosers can't be beggars can't be too choosy. You know what I'm saying? That's kind of where we're at right now. We need a lift in the global economy, not friction. The news coincides with data showing China logged in a record high 75 billion trade surplus in November. Strong growth in exports is good news for world economy, but could worsen China-U.S. tensions. I don't think it will. It's going to give them some leverage, and this is why I say right here, we don't need friction right now. Chinese exports surged 21% in November over a year earlier. That's very good news, propelled by strong demand from American consumers. Did you guys see in February and March what happened when Chinese parts were available? They were price gouging us on Amazon. We couldn't get anything. Folks, I got news flash for you. Half of the stuff you use, the parts are made in China. So if China doesn't have strong exports, we're going to be the one paying the price. A report by Reuters cited unnamed sources said U.S. Department of State and Treasury were preparing economic sanctions on a dozen more Chinese officials in response to Beijing's crackdown on dissent in Hong Kong. This is more political tension as far as I'm concerned. And right now, we need the least amount of political tension because we want to move forward. Hopes remain deeply rooted on Wall Street that one or more COVID vaccines will help rescue the global economy next year. Don't hold your breath. Don't hold your breath. China, Indonesia, Britain, and the U.S. are all gearing up to begin mass vaccination soon. But we've already found out that either the Moderna and the Pfizer vaccine is a live culture. Live culture means that people who have extreme sensitivity or not sensitivity, vulnerability to something cannot take it. And those are the people who need it the most. And yes, go talk to your doctor. If you have some kind of a immune deficiency or you're vulnerable to something, you're getting over something, you may not be able to take this vaccine because it's a live culture. I have people in my family now that can't take it because they're older or they have pre-existing conditions. So it's an issue. Also, Pfizer, I believe it was Pfizer. I think it was Pfizer who reported that half of their supply can't be shipped on time. So there's issues there. However, efforts to contain surging virus cases have been stoked worries about more economic pain from companies and consumers as governments around the world bring back varying degrees of restrictions. California's closed, and if Biden is going to take office next month, he is going to possibly cause another close down. Outbreaks are also scaring consumers away from stores, restaurants, and more normal economic activity. And I'm going to be honest with you. When we had it back in March, I didn't know anybody personally, or maybe one or two people that had it. Now, a lot of people I know have it. A lot of people I know have it. So we got to be really careful now. It's penetrating. Democrats and Republicans have been working on and off progress on talks for another round of support for the U.S. economy, including aid for laid-off workers and industries hit hard by the pandemic. A proposed COVID-19 relief bill is expected to get backing from President Trump and Senate Majority Leader McConnell, but it won't include a $1,200 in direct payments. Ouch. Crude oil above the $42.50, $43 that frackers pay, but don't get your hopes up yet because demand is not outpacing supply, not even close. Now, as far as the weekly news, the biggest news is going to be the CPI, consumer sentiment is going to be big, PPI, and jobless claims. Again, the biggest problem is we've got jobless claims around 750,000, finally broke below 700,000. I need to see it break below 700,000. These having claims of 750,000 each week is not helping us. And only 245,000 new jobs added as of last Friday. We are not in a good place right now, folks. So I would not be surprised at all if we continued a NASDAQ rally, which would mimic what we saw last February, March, and April, especially with put-to-call ratio being up here. And let me show you. I know, I've been showing this to you all the time, but you got to see this. This is the broad market. This is stocks, any stock that are trading above $2. Look at the 50-day moving average. Last month, 63% of stocks were trading above the 50-day moving average, now 84. Last month, 61% of stocks were trading above the 200-day moving average, now 85. When you get down to the NASDAQ, let me show you this. The numbers 88% and 81%. We are at the highest momentum level, folks, in a nutshell, that we have been in 11 years. So markets are overbought. Employment numbers are not great. Momentum levels. Look at this S&P 200-day moving average. You got to see this with your own eyes. Look at that. Let me show you 10 years. Look at that. Do you see that? Look, show me a higher level in 10 years. This is going back to 2011. Let me see this. April 2011, December 2020. Folks, we are not in a great place right now. And if you look at the SPY, not soybean, SPY, we are also diverging. I know you've seen it, you've heard it, but you need to know about it. So don't be surprised. Do not be surprised. Look at this. Higher price, lower momentum levels. Not good at all. We are overdue for a pull down. Now, something important. I want to show you something. Industrial, financial, and material are leading. Now, I know a lot of people are asking me about financial, and I want to show you why I'm not hot on financial. Look at industrial over a 2-year period. We took out the high, the previous swing high that we had before the crash, right? And basic material, XLB. Look at that. Took out the high, way high. But look at financial. Look at financial. See that? We're not there yet. And that really, really bothers me. I mean, really, really bothers me because I don't want to invest in any asset that hasn't taken out the high from the previous period that we've had. That's very, very, very important. So again, I would be very cautious with financials. I would stick with industrial and basic material, and I would be very, very cautious on the large cap stocks because they are grossly overbought. Now, the big report for the week, as I mentioned, the jobless claims report and the PPI final demand and consumer sentiment, because that'll reflect on retail sales. Now, before I let you go, there's one stock market phenomena, folks, that occurs every Friday is at exactly 4:01 p.m. Eastern Time. And I'm willing to bet 99% of traders have never, ever figured it out or even heard of it. That's because most folks have no clue when Wall Street clocks out at 4 p.m. Eastern Time to head to Manhattan Club's live trading prophet Josh Martinez is getting ready to make money. Make money. And all thanks to this phenomena, you could now have the power to potentially triple your investment in the next 2 months. Man, I love how Josh does this. All thanks to this 4:01 p.m. Friday phenomena. You've got to hear about it. This is the coolest thing. It can give you triple-digit gains. Click on the link below to see how this 4:01 p.m. phenomena, Friday phenomena works, and how you can get in on it now. You don't want to miss out. Folks, this is something that most traders have never heard of. Josh is crazy profitable. He's amazingly successful, and you got to check this out. You don't want to miss this. Again, when everybody hits the Manhattan clubs, Live Trade Profits is getting ready to make money. You don't want to miss out. Follow the link below. Check out how you can make money by watching what the market does on Friday at 4:01 p.m. Couldn't be easier than that. Follow the link below, and I'll talk to you guys soon. And give me feedback. I love feedback. Comments are welcome. Bye, guys. Take care. Have a great day. Have a great week ahead.